I don't see the same level of urgency to get out of Canadian dollars as I do to get out of the US dollars. In fact, you know, part of the investment strategy at EuroPac Canada excludes Canada. So your experience will be a little bit different than the experience that my clients have south of the border, because I guess a decent percentage of your portfolios will be in domestic stocks. Now, they're foreign stocks for my U.S. clients, but they'll be domestic stocks for you. But, you know, Canada, you know, isn't going to get a completely free pass here. There are problems in Canada. Many of you are probably aware of those problems. They don't rise to the level of the U.S. yet, but they're there. And so it is important that people diversify. Even if you live in Canada, you still need to have money invested around the world. I still think the most dynamic economic growth is going to be taking place in Asia. And there will be tremendous opportunities to make money there. We don't want to miss out on those opportunities. And there are other countries that, like Canada, are rich in resources that will benefit from the growth down there. You know, you want to diversify. You don't want to just have only Canadian resource stocks. There are other countries out there that you can invest in to hedge your bets. You know, when you live in a country, you're working here, you might be deriving a pension here. It makes sense to have as much of the money that you control yourself invested elsewhere, just in case. There are a lot of people that, you know, they work, you know, in America, they're expecting to draw a pension from an American company or Social Security benefits from the U.S. government, and then they take their money and then they invest in U.S. stocks and bonds, and they really are making a huge one-way bet. And you know, unfortunately, I think that bet's going to lose. But there's no reason to concentrate that heavily. You can invest, and hopefully what we'll be able to do at EuroPac Canada is the same thing we're doing in the U.S., which is giving retail investors broad access to the world stock markets, and not just through stocks that trade on your home exchange in Canada. There are going to be some foreign shares that trade up here. But by and large, most of the stocks that we look at don't trade in the United States. They don't trade in Canada. You have to go to their local markets to buy them, and we'll be able to bring you those stocks and individually tap accounts where you can develop your own portfolios with our guidance. And sometime soon here in Canada, you'll be able to access our managed accounts and our mutual funds. That's still in the works, but it should be ready relatively soon. Now, before I will take a number of questions, but I'll give you a little bit of a rundown on where we stand in the U.S. And what's going on in the global economy, because probably the most important factor right now in that economy is the U.S. And I think I'll let you know what my take is. I mean, a lot of people are assuming that the worst is over, that, you know, we dodged the bullet, you know, the government, we were standing at the verge of Armageddon. It was about to be the worst depression. There was going to be another Great Depression, and our fearless government officials came in, and thank God they bailed everybody out, printed a lot of money, and now we avoided the worst of it, and now the economy is getting better. And that's a fairy tale. That's not what's happening. The reality is, we didn't dodge any bullets at all. In fact, we're about to step on a landmine, and the economic crisis that's coming. And it might come in 2011. We might make it to 2012. It's no way to know for sure. There are a lot of variables that you can't know in advance. But the real crisis is coming. And I saw a few copies of my book, Crash Proof, floating around out there. And if you read that book, you understand that what happened was not the crash until I wrote about it. I wrote that it would happen, but I wrote that it would set up the crash. We've had the tremor, but the earthquake is coming. And I wrote in that book that the most likely cause was going to be the bursting of the housing bubble. In fact, I initially, when I first thought about writing the book, I was going to write just about the housing bubble. I was going to write a whole book about it. And I was trying to come up with titles, you know, The Coming American Nightmare, because everybody said it was the American dream to own a house, and I said, well, you know, it's about to be a nightmare. But I didn't necessarily know how I was going to monetize a book that just predicted the collapse of the housing market. So I wanted to have a broader book that had investment themes so that I could use it as a way to generate clients. So the part about the housing bubble was condensed to a chapter, although I referenced the housing bubble in various parts of that book. So I thought that what was going to happen was that the housing bubble was going to burst. And when it did, it would be a lot different than when the stock market bubble burst. Because when the stock market bubble burst, people were pretty much gambling with their own money. And so the people who lost were the people who bought these stocks. And it didn't have broader implications for the financial markets. It certainly had implications for the people who were foolish enough to buy those .com stocks. But it was very different in the housing market because people were gambling with other people's money. And so I knew the big losers in the real estate collapse were not the people who bought the houses, but the people who loaned them the money. You know, because every house comes with a free put. You know, you have your down payment. Once you lose your down payment, then the rest of the losses go to the lenders. And I knew a lot of Americans were buying with nothing down. So the lenders were taking all the risks. And I knew that when the bubble burst, it was going to take down the banking system. I knew that it was going to bankrupt Fannie and Freddie. And I knew these were going to be devastating realities that nobody really could see. And to me, it seemed so obvious. And of course, now to everybody in hindsight, it's just as obvious. But believe me, in real time, nobody believed it. No matter how loud I screamed it or how I tried to explain the problems in subprime and teaser rates and adjustable rate mortgages and liar loans and no doc, nobody could see it because everybody was blinded by the idea that real estate prices would only rise. And if that were true, if real estate prices paid for their mortgage, well, you could just take the house and sell it to somebody else, no problem. Nobody believed that real estate prices could fall. Well, they fell, and now everybody can see it. But we have the same situation going on right now, but people still are blinded to what should be obvious. It will be obvious to them, you know, once the next crisis happens, but it's not obvious now. So what happened? So we had the collapse of the real estate market, and the financial firms failed, as I predicted they would. And then in Crash Proof, I wrote that we had two choices. We could allow the banks to fail, we could allow Fannie and Freddie to fail, or we could bail them out. And I didn't know for sure what they were going to do, but I thought that they would more likely bail them out, because politically that would be the expedient thing to do, and unfortunately that is exactly what they did. I also said that the government was going to try to reflate the housing bubble with cheap money, low interest rates, and that's what we got. Interest rates were lowered to 0, which is even lower than the 1% that happened in the stock market bubble. So I said all this was going to happen, and then that was going to precipitate the real collapse, because that was going to bring about the collapse of the dollar, the collapse of the bond market, and then we were going to have a much larger economic crisis. And you could see that even playing out on smaller scales now in other countries. You can look at Ireland. Ireland is basically bankrupt, and the question is, will Europe bail Ireland out or will Ireland default? But Ireland got into trouble because their government bailed out their banks. Now their banks got into trouble because they made too many bad real estate loans, just like our banks. Why did they do that? Well, interest rates were very low in Ireland, just like they were in the United States. We caused that problem. We have the world's reserve currency. We kept our interest rates artificially too low. Other countries made the mistake of keeping their interest rates low, so their currencies wouldn't rise too much against the dollar. And so we, sent out our bad monetary policy, infected the decisions all around the world, and we pulled everybody into this bubble. But had Ireland simply allowed those banks to default and allowed the creditors of those banks to lose money, Ireland would not be in the trouble that it's in today. This is the same situation in the United States. Had we allowed banks to fail, had we allowed lenders to lose money, had we allowed companies to go out of business, the recession that we had in 2008 would have been worse. Statistically, we might still be in it. I don't know. But at least we would be repairing the damage. Because the recession is the market's way of curing the disease. The disease was that we spent recklessly. We borrowed money from the world and we used it to buy consumer goods. We didn't save enough. We didn't produce enough. We did everything wrong during the preceding decade. that's when everybody thought the economy was great because we were spending all this borrowed money. I knew that it couldn't last because we were spending borrowed money, and we weren't investing that money. It's different, you know, if you borrow money and build a factory, that's one thing. But if you borrow money and buy a plasma TV, it's totally different. And that's what Americans did. We shot. You know, there's an old expression, you know, shot till you drop. Well, we did it. And that phony economy came to an end. But all we're doing now, when you look at the economic statistics that we have, and people are now convinced that the worst is behind us, all they're doing is looking at the measures of spending. They're looking at GDP, and they're seeing Americans are spending more, the government is spending more, so the numbers are higher. The unemployment numbers are not as awful because a few people are finding jobs as a consequence of the fact that they're spending this borrowed money. But ultimately, the effects of that artificial stimulus wear off. It's just like a drug. It's going to wear off, and then the hangover is going to set in, and the U.S. economy is going to be headed back into recession, only worse than before because we're in worse shape. We took on more debt as a nation than we had before. Some of the debt has been transferred to the Federal Reserve from some of the banks, but the debt is still there, and in fact, it's growing. Meanwhile, the government has not allowed market forces to rebalance our economy, so we're not moving back towards a savings-oriented, production-oriented economy. Quite the opposite. The government is not allowing that to happen, and the government is growing dramatically in size, and that is part of the problem, because the bigger the government gets, the government has to take resources out of the private sector in order to sustain itself, and those are the resources that we need to transform our economy. Now, what a lot of people aren't paying attention to are the interest rates and the vulnerability and the dependence that the U.S. economy has on interest rates. The coming crisis will be, again, much like you're seeing in Ireland. Ireland wasn't having a crisis a year ago. Nobody was really talking about it. The debt was still there, but nobody was worried about it. Well, now they're worried about it, and now it's a problem. Because worrying about the debt means rates go up. And when rates go up, the government can't afford to pay. Just like in the mortgage market. The subprime mortgages weren't a problem until they reset. And when the teaser rates expired and people couldn't afford to make the payments, it was a problem. It was always a problem from the beginning because those rates were going to expire at some point. But no one cared about it until it happened. The same thing is going on with the U.S. government. No one really seems to care about the debt that we have. But when they care, it's too late. And you would think that our creditors would wake up